biggest challenge to America's auto industry is coming from China.
Sales of electric vehicles are projected to boom over the next few years.
Why Ford is moving EVs to exit Europe and China. A controversial move by one of the world's largest automakers, Ford. They decided to exit two of the world's largest automobile markets, Europe and China, for their electric vehicles segment. This decision has left many scratching their heads and wondering why a company with such a long-standing reputation and history of success in the automotive industry would choose to make such a bold move. Is it a sign of trouble in the EV market or simply a strategic business decision? In this video, we'll dive into the reasons behind Ford's move and explore what it means for the future of the EV industry. Picture this: the race is on, and Chinese automakers are giving their American counterparts a run for their money. And with the rise of electric vehicles, the competition has only intensified. Last year, GM sales in China took a hit of 20%, while Ford's plummeted by a whopping 33.5%. But here's the twist. It turns out that luxury brands that sell only electric vehicles are a hit in Chinese markets, and Chinese EV makers are seizing this opportunity, with their market share in China soaring by 17% in 2022, while foreign automakers dropped by 11%. That's because Chinese car companies are experts at building better and cheaper cars, especially EVs, that consumers can't get enough of. But don't count the US out just yet. American companies are redoubling their efforts on home turf, where they can count on a more reliable and loyal customer base. However, there's one thorn in their side: Elon Musk and his ongoing price war. The US versus China face-off is at a stalemate, with American companies losing ground in China. But with the pandemic forcing automakers to be more efficient and focus on profitable markets, it's a race to see who comes out on top. Unfortunately, GM's China sales took another hit of 25% in the first quarter of 2023 after a 20% decline the previous year. And with a hyper-focus on the US market, the retreat from China could be a risky move, especially since Chinese car makers are already aggressively chasing after the European market. Plus, who knows what the future holds? Chinese automakers may make a play to upend the US market. If you step into the shoes of the CEO of Ford and imagine the pressure you feel to lead this company to success, you'll know it's a daunting task. But Jim Farley has come up with a plan that just might do the trick. First things first, Ford had to make some tough decisions. By pulling out of Asia, China, and Europe and focusing on North America, they're putting all their eggs in one basket. But it's a strategy that makes sense, and investors can breathe a sigh of relief knowing the company is taking action. And they're not just sitting idly by. Ford is building a lithium iron phosphate battery plant in the United States, giving them a leg up on their competition in North America, second only to Tesla. Sure, Ford is making a killing in North America, but their profits in China are dwindling, so they're taking bold steps to address this issue. They're restructuring, letting go of 3,000 employees and sending engineering talent out of Europe to become a North American car company. They're not holding on to sunk costs, recognizing that it's better to cut their losses now and move forward. It's a smart strategy, as the North American car market is huge, with 16 to 17 million car sales per year. Ford is saying, we're going to focus on what we do best, and that's the North American market. It's a gutsy move, but it just might pay off. They're not going to let China beat them. They're doubling down on their strengths and becoming a leaner, meaner North American car company. It's no secret that many companies fall prey to cost bias, but Ford is making all the right moves to stay ahead of the game. Did you know that Ford's biggest profits come from selling pickup trucks in the United States? That's right, and they're now focusing all their efforts on their next-generation pickup truck platform. Ford is poised to take over the market from their competitors like Toyota and Honda. They recently announced a major overhaul to their business structure, which includes 3 separate business units for EVs, internal combustion engine vehicles, and commercial vehicles. They are also revamping their dealership network, making it more difficult for dealers to stay in business. This is necessary to increase profits for the company, as Toyota and Honda are unprepared to sell electric vehicles in North America. Ford is even cutting down on its headcount, with thousands of people already laid off in North America and Europe. They're also switching to an online ordering system with minimal inventory held at dealership locations. It's almost like they're becoming a new and improved version of Tesla, and it's the right strategy in our opinion. Also, Ford is making some serious changes that will shake up the industry. Not only is the company undergoing some major structural renovations, but they're also revamping its staffing structure to increase efficiency and cut costs. But that's not all. They're moving engineering talent away from Europe, Asia, and even China, and sending them to America, or giving them the boot. And if that wasn't enough, Ford is saying goodbye to unprofitable markets like India. Now, we all know there are a ton of people in India. It's the most populous country in the world with a whopping 1.4 billion people. But selling cars in India is no easy feat. The truth is, most Indians will not spend a lot of money on cars, as there are already local manufacturers selling vehicles at low margins. Even Tesla isn't too concerned with breaking into the Indian market just yet. Ford should shift away from areas where it is losing money and concentrate on areas where it is gaining money, which is essentially what General Motors has done over the previous 5 years. Ford's first quarter financial results surpassed investors' expectations despite these obstacles and modifications. The car maker exceeded expectations by reporting sales of $41.5 billion, earnings of $3.4 billion, and earnings per share of 63 cents. This is happening at a time when they lost $722 million on the manufacturing of their so-called Ford E, or whatever they call it these days, under their EV business. It really doesn't matter. I don't think it's truly a loss. Yes, they have lost money on every vehicle they have sold. They will now lose more money since they have reduced the price of the Mustang E. Ford is making bold moves by putting LFP batteries on their electric vehicles to offset their losses. Sure, the losses will be enormous, but that doesn't matter because they're taking the necessary steps to dominate the North American car market and disrupt all Japanese automakers to bring in a bigger market share. And let's be honest, those Japanese automakers aren't doing much to prepare for an electric future in the US, unlike the Europeans who are taking it seriously. So, Ford can swoop in and take all the sales away from them. It's a smart strategy, and Ford made the right call. They're getting rid of sunk cost bias and moving away from markets where they don't have a future. Instead, they're focusing on the one where they do. And that's the North American car market, which has been extremely profitable for them for the past 100 years. Even Warren Buffett and Charlie Munger didn't criticize BYD for selling 94% of all their cars in China. So why should Ford worry? Ford is making big moves and taking the necessary steps to dominate the electric vehicle market in North America. With their LFP batteries and strategic plan, they are poised to disrupt the competition and take over. Ford has a lot of debt, but they have less than their competitor, General Motors, who has a lot more debt than Ford. This is a positive sign for Ford's future. But don't let Ford's debt scare you off. A large portion of it, about 40%, is financial services debt. It's like Ford is a bank. So you can ignore a big chunk of their debt. In reality, only about 60% of their debt is real debt. And unless the US suffers from a catastrophic depression, Ford will get those loans repaid. That's why we believe Ford's plans are spot on. They're putting LFP batteries on their electric vehicles, focusing on North American car production, and doubling down on what makes them money. It's a smart move, and it's going to pay off big time. While other car companies are floundering, Ford is going to come out on top. What do you think? Do you agree with Ford's decision to focus on North America and exit the European and Chinese markets, or do you think they're making a mistake? Share your thoughts in the comments below and let's start a conversation. Also, don't forget to hit the like button and subscribe to our channel for more insightful EV content. And if you have any suggestions for future videos, let us know in the comments or send us a message. Thanks for watching, and I'll see you in the next video.